India's decisive military action, codenamed Operation Sindoor, sent shockwaves through the global community. This operation, a calculated response to a horrific terrorist attack on Indian soil, targeted terrorist infrastructure within Pakistan. The world watched with bated breath as events unfolded, and the financial markets, known for their sensitivity to geopolitical tremors, reacted in a flurry of activity. Operation Sindoor, while a military operation, transcended the realm of geopolitics. It ignited a firestorm of emotions, debates, and anxieties that rippled across borders. From the bustling trading floors of Mumbai to the nerve centers of global finance, the impact of Operation Sindoor was undeniable. The operation, shrouded in secrecy and executed with precision, served as a stark reminder of the volatile world we live in. As the dust settled, analysts and investors alike scrambled to decipher the long-term implications of this bold move. The financial markets, often seen as a barometer of global sentiment, provided a fascinating glimpse into the hopes, fears, and uncertainties of a world grappling with the ramifications of Operation Sindoor. The Karachi Stock Exchange, Pakistan's premier stock market, reacted to Operation Sindoor with predictable alarm. The benchmark KSE 100 index plunged dramatically, shedding a significant portion of its value in a matter of hours. This precipitous decline reflected the deep-seated fear and uncertainty that gripped Pakistani investors. The Pakistani rupee, already under pressure, took a further beating on the foreign exchange market. The currency's depreciation against the US dollar highlighted the vulnerability of the Pakistani economy to external shocks. International investors, spooked by the specter of escalating tensions, pulled their funds out of Pakistani assets, exacerbating the market downturn. The fear in the Pakistani market was palpable. Investors, grappling with the potential for military escalation and economic instability, opted for a risk-off approach. This flight to safety saw a surge in demand for gold and US dollars, traditional safe haven assets in times of turmoil. The KSE's response to Operation Sindoor underscored the fragility of Pakistan's economic recovery. The country, already grappling with a multitude of challenges, now faces the daunting task of restoring investor confidence and navigating the economic fallout of this geopolitical crisis. In stark contrast to the panic in Karachi, the Indian stock market, represented by the benchmark Sensex and Nifty indices, exhibited remarkable resilience. After an initial knee-jerk reaction that saw a brief dip in early trading, the Indian market staged a remarkable recovery, closing the day significantly higher. This unexpected bullish response took many analysts by surprise. Conventional wisdom suggested that a military confrontation, even a limited one, would trigger a risk-off sentiment, leading to a market decline. However, the Indian market's performance painted a different picture, one of confidence, national unity, and a belief in the country's long-term prospects. Several factors contributed to this optimistic sentiment. Firstly, the Indian government's decisive action against terrorism resonated with the public, fostering a sense of national pride and solidarity. This sentiment translated into a belief that the government was in control of the situation and committed to safeguarding national security. Secondly, the targeted nature of Operation Sindoor, focusing solely on terrorist infrastructure while avoiding civilian casualties, reassured investors that the conflict would remain contained. This perception of a limited engagement, coupled with the belief in India's military superiority, fueled the market's bullish run. While the Indian subcontinent grappled with the immediate fallout of Operation Sindoor, thousands of miles away, in the bustling financial hubs of Shanghai and Shenzhen, a different kind of market reaction was unfolding. Chinese defense stocks, particularly those of companies specializing in military hardware and technology, experienced a surge in value. This surge was directly linked to China's role as a major supplier of arms to Pakistan. As Pakistan's largest defense partner, China stands to benefit from any increase in Pakistani military spending in the wake of Operation Sindoor. Investors, anticipating a potential surge in orders for Chinese-made weapons systems, flocked to defense stocks, driving up their prices. Among the biggest gainers were companies involved in the production of fighter jets, missile systems, and electronic warfare technology. These companies, with their established ties to the Pakistani military and a proven track record of delivering advanced weaponry, were seen as prime beneficiaries of any potential escalation in the region. The performance of Chinese defense stocks, highlighted the complex geopolitical dynamics at play in the aftermath of Operation Sindoor. While the immediate focus remained on India and Pakistan, China's role as a major military power and arms supplier added another layer of complexity to the situation. When geopolitical upheaval strikes, markets often respond with heightened volatility. Investors tend to seek safe havens, such as gold or government bonds, while riskier assets like stocks may experience sharp declines. It's crucial to stay informed and understand the underlying causes of these market movements to navigate through uncertain times effectively. In the midst of market turbulence, there are always opportunities to be found. Some sectors may benefit from the changing landscape, while others could face significant challenges. By diversifying your investments and staying agile, you can capitalize on these opportunities and mitigate potential risks. Remember, a well-balanced portfolio is key to weathering any storm. It's easy to get caught up in the short-term noise, but maintaining a long-term perspective is essential for successful investing. Market fluctuations are inevitable, but history has shown that markets tend to recover and grow over time. Patience and discipline are your best allies in building wealth and achieving your financial goals. Now is the time to take control of your financial future. Stay informed, remain disciplined, and don't be afraid to seek professional advice when needed. By taking proactive steps today, you can build a resilient portfolio and secure a prosperous tomorrow. Remember, the journey to financial success starts with a single step.